Welcome back to the Daily Crypto Roundup. Today felt like one of those sessions where macro, geopolitics, Bitcoin, crypto equities, and altcoins all snapped back into one single story. The headline move was Bitcoin pushing through the mid-$70,000 and then testing even higher while oil dropped hard. The US dollar gave back its war premium, and risk appetite came roaring back across crypto markets. On top of that, crypto-related stocks ripped higher. Beaten down digital asset treasury names suddenly came back to life. Kraken made a major strategic move by agreeing to acquire Bitnomial, and Morpho surged as fresh institutional demand started to show up in the DeFi story. So this was not just a Bitcoin price update day. This was one of those days where the market reminded everyone that when the macro pressure lifts, crypto can move very, very fast. This episode is sponsored by Kraken. If you're buying or trading crypto and you want to support the show, use our Kraken link in the description. And one more quick favor. If you enjoy the Daily Crypto Roundup, please rate the show 5 stars on Spotify or Apple Podcasts. That small action makes a big difference. It helps the algorithm, helps new listeners discover us, and helps us keep bringing you these daily updates. The main driver behind the market mood shift was the easing of the immediate Iran-related supply shock. Iran said the Strait of Hormuz was open again to commercial shipping, which matters because that waterway is one of the biggest choke points in the global energy system. When traders fear disruption there, oil spikes, inflation worries come back, and risk assets usually struggle. But on Friday, that war premium started to evaporate. Oil slumped sharply as traders priced out the worst-case scenario, and that immediately changed the tone across broader markets. Even though Washington's stance still looked tough and there was still plenty of headline risk around what the US would do next, the simple fact was that markets saw less chance of an immediate escalation spiral. That was enough to take pressure off inflation expectations, calm nerves, and reopen the door for a risk-on move in Bitcoin and crypto. Okay, let's get to the first story. And that is where Bitcoin stepped in and did what Bitcoin often does when the macro cloud starts to lift. It broke back above $76,000 and then pushed towards $78,000, putting it at its highest levels in weeks and back into breakout territory. This matters because Bitcoin has spent a frustrating stretch of time trying to reclaim real momentum. Every time it looked ready to break, something seemed to knock it back. Whether it was geopolitical stress, risk-off sentiment, or traders taking profits into strength. But today's move felt a bit cleaner. The market was not just reacting to a random crypto catalyst. It was reacting to a broader unwind of fear. Oil down, dollar down, risk appetite up, and Bitcoin suddenly looking like it had room to run again. That is a much healthier backdrop than a pump built on pure speculation. There is also a deeper point here. Bitcoin still trades as both a macro asset and a crypto-native asset, and days like this show that perfectly. On one hand, it was clearly reacting like a risk asset, benefiting from easing geopolitical tension and a falling dollar. On the other hand, it still carries that alternative system narrative that makes people watch it closely whenever global uncertainty flares up. So Bitcoin was almost trading both sides of the story this week. First, it absorbed the fear. Then, as the worst-case oil scenario faded, it benefited from the release valve. That is why the market reaction felt so powerful. It was not only about relief, it was about positioning. A lot of traders were caught somewhere between caution and underexposure, and when the market turned, they had to chase. The dollar story also mattered more than many crypto traders will probably admit. The US dollar index erased its wartime gain and fell to its weakest level since late February as safe haven flows started reversing. That is important because a softer dollar tends to be supportive for risk assets generally, and crypto is no exception. When the dollar is ripping higher and traders are hiding in safety, liquidity usually gets tighter and speculative appetite fades. But when that safe haven demand starts to unwind, capital can rotate back into growth, beta, and risk. In plain English, that means crypto suddenly gets a much friendlier playing field. So today's Bitcoin strength did not happen in a vacuum. It happened with the help of a macro backdrop that became materially more supportive within hours. That stronger Bitcoin tape then spilled over into crypto-linked equities, and this is where the session got really interesting. According to CoinDesk, crypto stocks surged on Friday, and some of the most beaten-down digital asset treasury names led the move as Bitcoin hit $78,000. That tells you a lot about the kind of rally this was. Traders were not just buying the clean, obvious names. They were reaching into the more battered corners of the crypto equity trade and looking for leverage. In other words, when sentiment flipped, the market went straight for the names with the most upside torque. That kind of behavior usually tells you positioning had become too defensive and participants were scrambling to reprice the upside. It does not guarantee a sustained rally from here, but it does tell you that this move had real force behind it. Now, one of the biggest company-specific stories of the day was Kraken. Payward, Kraken's parent company, agreed to acquire derivatives exchange Bitnomial for up to $550 million in cash and stock. That is a major headline, and not just because of the size of the deal. The bigger point is what it says about Kraken's direction of travel. CoinDesk reported that the acquisition brings key U.S. derivatives licenses under Kraken's roof, effectively giving it a much stronger regulated derivatives stack inside the United States. That is strategically important because derivatives remain one of the most valuable pieces of global crypto market structure. Spot trading gets attention, but derivatives are where a huge amount of the real volume, hedging activity, and institutional engagement sits. So if Kraken is tightening its grip on regulated U.S. derivatives infrastructure, that is not just an expansion headline. It is a positioning move. And that positioning move matters in the broader context of where the industry is going. The next phase of crypto competition is not just about who has the biggest brand or the most retail users. It is about who owns the rails, who has the licenses, who can serve institutions cleanly, and who can bridge crypto trading into something that looks more mature and defensible. Kraken buying Bitnomial fits that playbook. It suggests a company trying to become more than just another exchange. It suggests a company trying to become a fuller market infrastructure player. And when you combine that with improving macro conditions and rising Bitcoin prices, you can see why traders would view that positively. In a stronger market, strategic expansion stories suddenly get rewarded much more aggressively. Away from Bitcoin and the large-cap exchange narrative, Morpho was one of the standout altcoin movers. The token rallied more than 12%, traded near $2, and hit its strongest levels of the year. The reason this story matters is that it was not just another random altcoin pump. The move appears to have been driven by institutional access and product expansion. Crypto.news reported that Morpho's integration with Fireblocks opened access to more than 2,400 institutional clients, creating a potentially meaningful pipeline into its vaults. The same report said Fireblocks processes more than $200 billion in monthly stablecoin volume, which gives you a sense of why traders took the news seriously. If Morpho can sit closer to institutional stablecoin flows, even indirectly, the market is going to start pricing it differently. On top of that, Morpho has also been widening its product set. Its new Morpho Midnight offering is aimed at more predictable fixed-rate, fixed-duration lending, which is exactly the kind of framing that tends to resonate more with traditional finance participants than the old Wild West version of DeFi ever did. And then there is the longer-term credibility layer. Crypto.news also pointed to support from Apollo and deposits from the Ethereum Foundation into Morpho vaults, which adds to the idea that this protocol is being taken more seriously by larger players. So Morpho's rally today felt like part momentum, part narrative, and part market recognition that DeFi infrastructure with institutional pathways can still attract serious interest when conditions improve. Stepping back, the full picture today was actually pretty coherent. The worst of the immediate geopolitical oil panic cooled. Oil plunged, the dollar softened, Bitcoin broke higher, crypto stocks ran. A major exchange M&A story reinforced the market structure angle. And then one of the stronger DeFi names caught a bid on institutional adoption news. That is what a proper risk-on crypto session looks like. It is not one isolated candle on Bitcoin and then nothing else. It is a chain reaction. Macro eases, liquidity mood improves, Bitcoin moves first, equities and altcoins follow, and strategic company headlines suddenly matter more because investors are in a mood to reward growth again. Now, that does not mean the market is suddenly safe. It definitely is not. The geopolitical backdrop is still fragile, and today's relief could be challenged very quickly by another hostile headline. Even the Hormuz story itself still carried tension because while Iran said the route was open, the broader political situation remained messy, and U.S. pressure had not simply vanished. So traders should not confuse a powerful relief rally with a fully resolved macro environment. But what today did show is that crypto still has a lot of pent-up upside sensitivity. If the pressure comes off even slightly, this market can rebound far faster than people expect. And that is probably the key takeaway for tonight. This was a reminder that crypto had not lost its ability to move with force. It had been pinned down by fear, by uncertainty, and by external risk. Once some of that lifted, Bitcoin was immediately back, threatening a major breakout. Crypto stocks were flying, and selected altcoins with strong narratives were getting re-rated. In other words, the market was waiting for permission. Today, it got some. The next question is whether it gets confirmation. So heading into the next session, the levels matter, but the bigger story is whether this shift in tone holds. Can Bitcoin stay above this reclaimed range and build on it? Does the dollar stay soft? Does oil remain under pressure? Do crypto equities keep catching bids? And do institutionally linked DeFi names like Morpho continue to outperform? If the answer to those questions stays yes, then today may end up looking less like a one-day squeeze and more like the start of a broader momentum turn. And before we wrap up, a big shout out to this week's XRP giveaway winners, King John III and LA Kings Ellen, who are both getting 10 XRP. Massive thank you to everyone in the community for listening, supporting, and constantly commenting on the show. Keep getting involved, keep sharing your thoughts, and keep showing up, because it could easily be your turn next week. We really do appreciate every single one of you. That is your daily crypto roundup. If you are watching this market closely, the big theme right now is simple. Macro relief has reopened the door, and crypto has sprinted through it. Like and follow, and we will see you at the top.